So today we're going to be taking a look at my top performing dividend paying investments in my portfolio. So whether you're new to dividend investing or just want some new ideas, check out this video for some choices that are giving me both growth and the potential for steady income. So I'll be covering a few points on each of these investments. We'll be going through 4 of them. Don't forget to subscribe and hit that notification bell and give this video a thumbs up. So let's get started. First off, we're going to take a look at Main Street Capital. This is a business development company. All the rest that we'll be taking a look at today are going to be ETFs. So it pays out monthly. Main Street Capital is basically an alternative to a bank. It serves as a non-banking financial option for lower middle market businesses. It has a unique structure. It offers both high yield and monthly dividend payouts, so you get a steady cash flow. The company's diversified approach in different industries gives it resilience, which can be great in all economic conditions. And of course, also makes it attractive to investors like you and me. So let's take a look at the performance of Main Street Capital on the month. It's up 2.65%. Over the last 6 months, up 3.77%. Year to date, up 18.46%. Over the last year, up 35.48%. So it is a strong performer comparable to market indices, showing its resilience and growth potential. So as I said, Main Street Capital is a BDC, so it doesn't have an expense ratio like we'll be going through on the other investments for exchange traded funds, that management fee that you have to pay. Its operational costs are within its business model, so investors get to keep those returns. In addition to its high yield that pays out monthly, which I also love, the company regularly issues special dividends that boost its overall return. And you can see from this article here, Main Street has declared its 12th consecutive special quarterly dividends. So when it comes to my position, I am currently up 26.42% and have 37 shares in my portfolio. So if you're not already investing into Main Street Capital, this is number 1 that I think you should put on your list to take a look at. Now on to another monthly paying dividend investment, and that is SPHD. So this is Invesco's S&P 500 high dividend, low volatility ETF. On the month, it is currently down 1.34%. Year to date, up 15.75%. Over the last year, up 32.33%. So this ETF selects 50 stocks in the S&P 500 with the highest dividend yield and lowest volatility, meaning it targets companies that can provide stable income while weathering the ups and downs of the market. SPHD's monthly payout and emphasis on sectors like utilities and consumer staples makes it an attractive option for steady income. So you see, this is a very diversified ETF giving you exposure to utilities, staples, healthcare, real estate, energy. Some of its top holdings are Altria, AT&T, Verizon, and Bristol Myers. It has an expense ratio of 0.3, which, as you can see here, is not on the low end, but is considered reasonable given its structure and sector focus. SPHD might be one to consider if you're interested in income but don't want high risk. Here are some others that you can take a look at. I found that SPHD was listed in this list of defensive-oriented exchange-traded funds that can help you mitigate the risk during economic downturns. And when it comes to my results of my investing into SPHD, I'm up 20.02% and currently have 38 shares. Next up, let's take a look at SCHD, which is the Schwab U.S. Dividend Equity ETF. It recently had a 3-for-1 stock split, and the stock price is currently $28.21. Over the last month, just up 0.11. Year to date, up 10.37%. and over the last year, up 25.04%. So SCHD is a favorite among dividend investors. The ETF targets high quality US companies that pay dividends and offer a yield of around 3%. SCHD tracks the performance of the Dow Jones Dividend 100 Index, which screens companies based on financial health, cash flow, and dividend sustainability. So it has an expense ratio of 0.06, so much further onto the low end of the spectrum than SPHD. It gives you broad exposure to different sectors, including industrial, consumer staples, energy, financial, healthcare, and technology. It's packed with strong financial companies, including big names like Home Depot, Pfizer, and UPS. So its low cost and strong performance make it a popular choice among investors looking for that balance between the growth potential and steady dividend payment. So let me know in the comments, are you investing into anything that I've mentioned so far? Main Street Capital, SPHD, or SCHD? Okay, so now the last one I'm going to touch on for today is VTI. And that is the Vanguard Total Stock Market Index. It is an exchange traded fund that gives you exposure to 3,678 different holdings across various sectors. Now, this one is more tech heavy because it is weighted by market cap. Those are the companies that are leading right now. So the top holdings here are Apple, NVIDIA, Microsoft, Amazon, Meta, Google, Broadcom, Berkshire Hathaway, and Eli Lilly. So this is one of my favorite investments, which gives you exposure to the entire US stock market, including large, mid, and small microcap stocks. This broad exposure gives both growth potential and diversification, which is key when it comes to building your wealth over time. It has an expense ratio of 0.03%, which also is a plus for long-term investors who don't want to see fees eat away at their returns. You're not getting the highest yields here, but the growth potential and diversification is what made it a good fit for me for long-term investing. So do you have any other investments that give broad market exposure similar to VTI? Let me know in the comments. So I'm going to tag a video because if I was going to go on to number 5, it would be VOO. But I'm going to share a recent video, I'll tag it here, of my current progress in investing into VOO and FXAIX. But let me also include my current results when it comes to VTI. I am up 34.19%. And this is one of my positions that I have, and I currently have 20 shares. So these investments, the BDC, Main Street Capital, and the ETFs, SPHD, SCHD, and VTI, have all given me solid returns and are allowing me to build upon investments that I think are going to give me that balance of consistent income and capital appreciation. Building wealth takes time. I am glad that I've incorporated these investments into my portfolio. So remember, building wealth, building a portfolio takes time. I'm glad that I've incorporated these investments into my portfolio along with my crypto and blue chip stocks. Whether you get started by buying 1 share per week or dollar cost averaging weekly or daily into multiple investments, come up with a plan, take your time, be disciplined and consistent, and get started building your portfolio. I hope you enjoyed this video. If you did, don't forget to give me a thumbs up. And if you're not already subscribed to the channel, subscribe and hit that notification bell. If you're ready to open a new account or are interested in joining my channel membership, check out the links. They'll be in the description and pinned in the comments. Thanks for watching. Okay, bye.